All right, everybody. Today was a big day in earnings report with everything going on. We went over yesterday some of the companies I was interested in watching. We're going to see how they did. Also, we're going to go over one of the stocks that am interested in seeing how it does tomorrow. So let's take a look. First off, we have Zillow. They came in with their quarterly earnings, and it was surprisingly impressive. Let's read about it here. We can see here that their total revenue grew by 148% year over year to 1.1 billion, but they still took a loss of about 41.5 million before taxes. But don't worry, they have a lot of ways to get through this. We can see here right below that the company grew its cash from 2.6 to 2.4 billion. Well, if you're only losing 41.5 million in a quarter, you can sustain that for a long, long time. We can also see that the Premier Agent grew to 11%. This is their way to advertise agents to people, and they make a lot of money doing it. We can also see that they sold 2,300 homes and purchased about 1,500 homes. That makes them down to 1,700, well, about 1,800 homes on inventory, down from about 2,700. But they say here that's strategically. I'm not sure if it was strategically or if it's because they actually stopped buying because of what's going on from what I heard. Either way, their mobile app and websites also increased 6% year over year. That's awesome. That's all great news. We can even read a little more and we can see year over year financials all across the board are fairly good. But what did the stock do? Let's take a look. Zillow stock. It was booming today. It went up 12%. We can see here if we go down to the 1 day, it actually went all up before the earnings were even released because earnings were after hours. And then we can see after hours today, we're actually down about 1.2%. But that was even more interesting is let's look year over year. They were talking a lot about how their revenue had gone up 148%. They were buying more and more homes, and things are really looking bright. But what has the stock done in an entire year? It's gone up 40%, which is actually pretty good. But we can see here, they were all the way up to almost 100% growth at one point, not for a long period, but for a while. And also at one point, they were down at the lowest of lows in recent history, down to $23 a share. Imagine if you would have bought some when it was down here, and you'd be up 80%. That's impressive. Remember, their competitor also came out with a earnings report. That's Redfin. Let's see what Redfin did here. Well, their revenue wasn't quite as good, but it increased 73%, all the way up to 191 million. That's really good. But they also did a lot of things. Gross profit was only 13 million, but that's also an upgrade, 368%. But they did a lot of stuff, and it brought the net loss down to 60 million. Well, that's because their operating expenses are all the way up to 70 million. But that's actually not up. If we read further, you can see 70 million was how much it cost the first quarter last year for operating expenses. And actually, their net loss of 60 million is about 10% better. As last year, they had a net loss of 67 million. That's not awful. But what we need to look at is to see what cash and what cash equivalents they have on hand. Well, let's see if they show that anywhere down here. Oh, we can see also their revenue up significantly, but their cost of revenue also up significantly. Let's see, cash and cash equivalents. Oh, that's not good. It's actually down. And if we look at their total assets, it's pretty much flat. That's not fantastic unless they can make a profit out of what they're doing. If you make more money but spend equally as much, is it truly growing your business? Let's see what the stock did to see how the investors feel about this. Well, today it went up 5%. Again, doing almost all of that before the stock even came out, or before the earnings report even came out. After hours, we're not even up 1% after this. And if we look 1 year since they were talking about they have grown 80% in 1 year, we can see that their stock was $20 back then, and now only $22 now. That's only 13% up for being such a growing market. That's pretty substantial. Even at their peak, they were only 60% up. Seems like Zillow is honestly doing better, but Redfin does have an opportunity here and there to make a move. And it seems as well that people are liking the idea more and more of companies just buying your house, almost like trading in a car, making it simple, easy, not having to go through the selling process. Even if you don't get what your house is really worth, seems like people are really about it. And for investors, it can mean good things when it comes to trying to buy people's houses, selling out mailers, but it can also mean bad things, with less houses being on the MLS possibly before they get fixed up by companies like Redfin and Zillow. Another company was AB InBev. So I'm going to start out by saying I was wrong. I thought AB InBev would have grown during this quarter. I thought they would have been fantastic. I thought things would be great. But I didn't think about the world. The world's having a lot of different reactions to what's going on right now, and AB InBev can show that very easily. Let's take a look. So as we know, SeaWorld is pretty much totally shut down, but they still have animals to take care of. They still have lights to keep on. They still have water to keep clean. So their expenses probably are pretty similar to what they were before. We're going to be curious, in my opinion, to see how they've gotten through it, see how they've gotten cash to make it through, and as well see what plans they have when they come to reopen, or if they're doing anything right now to try to grow income during these tumultuous times. We can see their stock, by the way, we're at a 6 month view, is surprisingly only down 60%. To me, I might sound crazy, but that's not enough. For a company that's not making a single penny, and for a company whose expenditures, in my opinion, can't go down very much, that doesn't seem like far enough of a drop. But we'll have to see tomorrow what their financials say. See if they have a lot of cash on hand to make it through. See if they've gathered up some loans. See what they're doing. I'll let you know about that tomorrow. Until then, do your own research, come up with your own advice. Take a look at around you, see what you can formulate, and let me know what you find below. Thanks for watching.